Welcome to the Standard and Rich podcast, where finance meets fun. Join your hosts Danny Gallo and Jonathan Elkoubi as they navigate the complex world of finance with a touch of humor.
Welcome back, everybody, to the Standard and Rich podcast. Today, we're going to talk about some ETFs. Let's get started right away. I want to talk about the Vanguard S&P 500 Index ETF. This is one of the best ETFs. Everybody knows about it. It includes the 500 biggest companies in the United States. The ticker is VFV. This is the Canadian version. So for us Canadian investors, we'll buy it the price in Canadian dollars. If you want the stock in American dollars, ticker is VOO. Same thing, Vanguard S&P 500 Index. And it goes from technology all the way to consumer durables. It's the broadest index. Has all sorts of industries, and the management fee is super low at 0.08% with a dividend of 1.07. So it pays itself with its dividend and an extra 1%, and it's all around solid ETF with a good return, 10% per year in the past 50 years. So it's consistent, solid. Everybody knows about it. It's very safe and a good bet. So Danny, what do you think? You have the next ETF?
So for my ETF, I would go with the BMO Nasdaq 100. So that's ZQQ.TO. A lot of people think Nasdaq is really only tech, but it's not. So if we look at their top 10 holdings, you're going to have Microsoft, that's first, then Apple, Nvidia, Amazon, Broadcom, Meta, Google Class A, Google Class C, Tesla. But you also have, as there's 10th biggest holding, you have Costco as well. So there's a bunch of different stuff. It literally just tracks the NASDAQ. It's a zero expense ratio. It also has a nice track record these days. So the past year, it's been up 30.08%. And it's up almost 17% year to date. What about you? Do you have another ETF?
That's a pretty good ETF. I want to talk about another ETF here. If you guys want to, so I just want to show you guys how specific you can get with ETFs. You could actually go into an industry. So for this example, it's a bank ETF, BMO Equal Weight Banks ETF. Ticker is ZEB. So basically, it's equal weighted. All the big banks in Canada, like TD, CIBC, BMO, obviously National Bank, and they have a good dividend of 4.68%, high dividend because it's financial institutions. They all pay big dividends. The management fee of the ETF is a bit higher at 0.25%, but it pays itself with a dividend many times over. So I mean, it's not much to worry about. And you're just getting exposure to the big Canadian financial industry and with a solid dividend. So you get growth plus dividend, and the dividends are distributed frequently monthly. So it's pretty good. What's your next pick, Danny?
So just to let people know that you could really go all over the place with these ETFs. So I'm going with the India market ETF, so the iShares MSCI. So it's the ticker INDA. I'm pretty bullish on this ticker. It has a high expense ratio at 0.65%, but I'm very bullish on the Indian market. If you look at 2007 in China, the GDP per capita was 2,700. If you look at India, and it grew 6x since then to today. And if you look at the India GDP per capita right now, you guessed it, 2,500. So I think it's going to head towards the same direction. That's why I'm pretty bullish on this ETF. How about you?
My final pick for the ETFs is going to be BMO All Country World High Quality ETF, ticker ZGQ. It's basically a whole world ETF, and it's very low risk. It's very diversified into different countries. Of course, it's mostly holding U.S. because that's the biggest GDP. It's not equally weighted. And yeah, just if you want to add this to your portfolio, just to lower your volatility and kind of give you a stable investment, the return will be lower than the S&P 500, but the volatility will definitely be less, and it's a lot less volatile, safer in many definitions. And Danny, if you want to buy all these ETFs, we're going to need a brokerage firm that has a very easy to use user interface. We don't need to be like finance PhDs to navigate this interface. We just want something like easy to use, anyone can understand, and commission-free trading. What broker would you recommend for this?
For commission-free trading broker, I would personally go, and I personally use Wealthsimple. So if you click the link down below, you'll be able to start signing up today and receive $25 as soon as you fund the account with $1. So that's a free $25 as you sign up.
All right, so I think that's a good point. Let's talk about the stock market news. Danny, what's new? What's going on this week?
So there was a bunch of news this week. Let's start with the Tesla shareholder meeting recap. So the vote did get approved for Elon Musk's pay package. It was at 73%. So if we go back to 2018 when that was first proposed, the shareholder approval was 74%. Just to tell you how much it was still, people still believe in Elon's, and he deserves what was agreed upon. So they also talked about them hitting a weekly Cybertruck production record of 1,300 trucks per week. They also they aim to build by the end of the year 2,500 Cybertrucks. It's gonna end the Foundation Series production soon and start the lower trim model production next quarter. It approved plans for volume production of the semis, so that'll start ramping up as well. They also talked about the rumors of the death of Tesla superchargers are greatly exaggerated. They plan to invest $500 million into the end of the year. They're on track for 2024 to have a growth of 200 to 300% year over year on their energy storage deployment. They completed the design of their hardware version 5 computer, calling it AI5. That's going to come out at the end of 2025. That is apparently 10 times better than hardware 4 that's coming out later on this year. They predict that they're going to have thousands or a few thousand Optimus working at their factory next year. They had 2 last week, and I think they have 12 this week that started working in the factory. It's going to allow free FSD transfers for 1 more quarter. And they also think they have a AWS type of opportunity with whenever they scale cars, whenever the cars are not using FSD. If they have 1 kilowatt of efficient inference compute, it's going to be making 100 gigawatts of compute distributed all over the world. That's if they have 100 million cars. So they do think they're going to grow that way as well. And Elon did say that they have a lot of new products that they're working on, and that they're going to be pretty special. Did you see anything in the news that you liked this week or that surprised you?
Well, one of my companies, I think the last week stock pick, VBNK, just got approved for their U.S. Bank acquisition. It's a very small bank they're acquiring, so I wasn't really surprised. I knew they were going to go through, but it just confirms the stock thesis. So now basically they're going to go through with the acquisition, and they're going to be forced to sell their cybersecurity company, which will realize value for the company, and people are speculating that it's worth at least $100 million. That's what I got for this week's news.
There was also a Taiwan semiconductor that's that's reportedly planning to raise their prices on their 3nm chips by over 5%. And they have another type of chip as well that they said they were going to raise prices over 10%. There's McDonald's that we spoke about last week as well, that in my bull thesis, I did talk about the AI introduction to their stores, but they have decided to end that, and they plan to remove the technology from 100 restaurants that have been using it.
Do you know why?
Mm. I don't really know why. I haven't digged into it a little bit more, but it is something that's pretty interesting. So I will dig into it. Also, the big news this weekend was Sam Altman reportedly told investors that the AI company is considering changing the government structure to a for-profit business, which I'm pretty sure they've been operating as a for-profit business, but as a non-profit business, which is pretty weird. So that's it for my market news.
Is that illegal?
Oh, see, hey, they have Microsoft with them, so I don't know how they're gonna work that thing through. We'll see if the SEC decides to push something into it.
So you want to transition into the stock battle of the week and summarize what happened in last week and the closing weeks.
Hey guys, don't forget to click the links below to sign up on Wealthsimple and Questrade to start investing. You will get a free $25 and $50 sign-up bonus with any deposit amount over $1. And also, don't forget to like and subscribe our podcast. So for the stock battle, the recap of the last few weeks. So 3 weeks ago, we did take two Chinese companies. So you took Baba and I took PDD Holdings. So Baba is down 8.27% since that time, and PDD is down 2.75%. So far I'm beating you on this one. And on the last week episode, you took VersaBank. You're up 3.3% since last week, and I took McDonald's, which is pretty flat at minus 0.12%. So for the stock battle this week, I will be taking TSM. So it's pretty easy to be bullish on TSM. Like we spoke about just before with the market news, TSM just raising their prices. They have a pretty niche product. They do have some of the biggest companies as their biggest buyers. So they raised their prices for the 3nm manufacturing by 5%. And the other one that I was talking about, their packaging was going up 10 to 20% starting in 2025. So that's due to a capacity shortage that's expected to last through 2026. It's also looking to double their capacity to 33,000 wafers a month and double their 3nm capacity to 180,000 wafers a month. The production capacity is booked through 2026 by four major customers, which are Apple, Nvidia, Qualcomm, and AMD. So they're really in a win-all scenario. Their bearish thesis is China invades Taiwan. That's probably the only bearish thesis that you have on Taiwan Semiconductor. Anybody that wins the AI race, the semiconductor race, or anything, they're huge winners. If Apple wins it, if Microsoft wins it, if Nvidia wins it, Qualcomm, AMD, they're winners in all those circles because they build their chips. So that's my bull thesis on TS.
What
Yeah.
happens? So you said they serve like four big customers, right? So what happens if one of the
Yeah.
biggest customers leave and start producing their own chips, vertically integrate? I mean, it's a bigger risk because
I don't even. I think that's too much of a hassle for those companies to start doing that. They are producing their own chips, but they're producing their chips through TSM's technology. You understand? So it's not hurting, like Apple's producing their own chip, right, for the phones. Well, that chip is getting technically produced by Taiwan Semiconductor. They create that chip for them, so it doesn't affect them at all. What about you? What stock
So my
are you
stock
picking?
pick of the week is Toronto Dominion Bank, TD ticker. Obviously, there was a big scandal in this company, so it sent the stock price down. I like to buy when there's fear in the market and sell when there's greed. So over here, there's blood in the streets. It's time to buy. So basically, there was a scandal for money laundering. TD was helping their clients money launder. The stock is down, I think, around 10%, so, something around those lines. It's a big Canadian bank, the sixth biggest bank in North America, has U.S. exposure, very conservatively capitalized. I think it's the most conservatively capitalized bank in Canada. I don't want to be mistaken, but I'm pretty sure it is the most conservatively capitalized. So it's low risk profile, and their growth is good because they're expanding. They have U.S., they have Canada, and they're also going South America. They have China. They have locations everywhere, and it's just good growth. There's an opportunity buy right now because of the scandal. So I think it's a long-term buy if you ignore the scandal, because it's going to go away in a couple of years and people will just forget about it, just like every other company in their scandal history, you know?
Yeah. So they are facing, from what I've heard, is one of the biggest fines ever given by I think it is the U.S. Department of Justice and the SEC. I heard it's going to be around $2 to $3 billion in fines. Yeah, it's been going down practically for that reason. They also have a big portion of their revenues that are from Canada, right? So they're reliant on the Canadian economy. Mortgages are coming up, renewing this year, so a lot of people are going to go from that 2% rate that they had in 2021 to 6% rate. So it's almost like doubling well, not doubling, like 50% higher mortgage payments that people are going to see. So do they have the strength to support that, or are they going to go belly up on their loans? That would be my thesis on TD, but it is a strong bank. It's one of the biggest banks in Canada as well. I think pretty sure it's top four. If it wasn't for that fine, I'm pretty sure they would have done a bid to acquire Laurentian Bank to extend their exposure to Montreal and to the Quebec region. And that's it. But you're right, there's a lot of blood in the water. And normally, a company like that's going to be able to effectively surpass that,
Yeah.
withstand that as the years go by.
Yeah, but I think you were mentioning the rates are going to affect them, but I mean, Canada has rigorous mortgage testing. It's a lot more strict than the U.S. used to be, you know? I mean, they test you for different scenarios, and I think you have to be prepared to pay like 7%, right? If I'm not mistaken.
Okay, so you are mistaken. So back then, when you were passing out a mortgage, okay, so you had to pass a stress test. So let's say you were having a 1.8% mortgage. You had to pass a stress test for 3.8%. They're not making you pass a stress test for 6.5%. So you're passing at 3.5, but you're almost doubling that 3.5 now. You're going 100% higher than that. So yes, the stress test normally is good, but for that expansion in rates, how it exploded, how people didn't think it was going to explode like that, um, and especially at the prices that they bought in 2021, which was one of the highest, people were just bidding on houses. You would have 50 people bidding on one house, and it was like an auction. Um, I don't know if everybody's financially okay with that type of jump. It's a huge jump.
Yeah, and inflation's higher, people's costs are higher. So obviously they have
Exactly.
a higher
So
mortgage payment.
you're getting hit in all the directions. And probably in the past 5 years, maybe they changed cars too. You know what I mean? They're like they had a low rate, so maybe they went to buy a new car. So all their groceries went up, their mortgage is going up. They're probably the only thing that went down is their cell phone bill, which $20 a month is not that huge.
Yeah, but I think TD is also very conservatively capitalized. They're one of like the most conservatively capitalized banks. They have like a 15% capital to asset ratio. So they have like a lot of room to make errors and mistakes just because of that. So I think if this is not the bank that's going to go down. Maybe it'll be another bank, but I don't think it's this one. You know what I mean?
Yeah. Look, like I said, in the long term, I think the bank is going to be all right, and it should bounce back from where it's going right now. It's it's probably the worst one, not the worst performing bank in Canada, but the one that's been hit the most since year to date. So down 14%. If you look at Royal right now, year to date as well. Royal's probably up 6%, so that's like 20% difference in between those two banks. Now let's go see CIBC how they're doing. CIBC, can't find it. Anyway, so yeah, BMO year to date's been exploding. I'm pretty sure. No, BMO2 is down 12%. So what happened in the past month? Probably had bad earnings. I would guess. Yeah, end of May. So yeah, they probably had bad earnings, but that's pretty funny that they're down around the same percentage as TD, and TD has a ongoing case with the U.S. Department of Justice. So that's to be determined.
So we'll see next week who wins the stock battle. Obviously, guys, don't forget to
Yes.
like, subscribe, and follow. Thank you guys for watching.
Thank you very much.
Before we go, a quick reminder. While we love discussing financial topics, we are not financial advisors. The information provided in this podcast is for educational and entertainment purposes only. Please consult with a qualified professional before making any financial decisions. Thanks for listening, and see you next time.